There's some good scalping right now. I've been fading like basically every move up and done well. But obviously, it's going to get a lot quieter and a lot more erratic shortly. So anyway, come on in, everybody. Grab a chair. I'll talk about what we're going to do in this session in a little bit. I'll wait for people to roll in because the announcement doesn't come till the top of the hour and the press conference doesn't come till the bottom of the hour. So we're going to have a little time here, and that's all right. This session is open to the public, so we probably have some guests, so welcome guests. And it's going to be very informal. If you have any questions, just throw them in the chat. I will make every attempt to get to them as soon as possible. This market is preparing to rip some people a new one whenever the number does come out. And particularly if there's any sort of surprise, it just feels like it could really tear to the upside, most likely, unless, something really shocking happens, like they go ahead and do a half a rate or a half a point. That would shock everybody, I think, and that would probably sell us off pretty hard. But you never know. Quarter points expected, 0.0, no change. That would really get people interested, but it might not necessarily be a positive. You think it would be, but the fact that they would even consider doing that means they're concerned about the banking system. So, you could see a two-way reaction very easily. So anyway, we'll talk more about what we're looking for once we get a little further in and more folks roll in. But that's the quick introduction for the moment. Meanwhile, the market's just kind of flat in the range and providing lots of good scalping opportunities. The internals are flat. Nothing's really up substantially or down substantially. So, which is what you would expect going into FOMC, which is why it's so tradable beforehand. Fade the range. Ranges are what you're going to get. We're not likely to see trend moves before FOMC, but could we see one afterward? Oh, yeah, we could. We definitely could. So that's the story. Pull up a chair. God, it's so fun. I've been watching Fed announcements for a long time. I mean, I remember when CNBC and before them, Financial News Network used to televise, the chairman walking in. What color tie is he wearing? What knot does he have? Which hand is his briefcase in? There were all these wagers based on those things as to what the decision would be. It was pretty funny, particularly with Alan Greenspan. For some reason, everyone did that with him a lot more, but he was pretty comical. And Bernanke, a little bit of that too, but Greenspan was really the one that, he had a gift for putting things in words that just were always amusing.
The Bernanke.
Yep. Yeah, ever since Bernanke and Greenspan, we really haven't had a charismatic Fed chairman. They're all more matter-of-fact banker types. You could ask Greenspan a question like in his congressional testimony, which color is darker, yellow or black? And he could give you a 35-minute answer. And it was just, hysterical. And I always liked the way he engaged the congressman. He's always like, I'm so much smarter than you, but go ahead and ask your stupid question and I'll answer it anyway. He was pretty cocky. All right, another minute or so and I will kick us off here. Again, very informal session. We're just going to see if we can get some good scalps off of the announcement and the press conference volatility, but we'll also talk about just the overall stuff going on. This is a fun session. We get the decision and then we get the press conference half an hour later. So basically what's going to go on here, I'm going to go ahead and start right now. Basically what's going to happen, we're going to get the decision and that's going to create a lot of price discovery. As I said a little bit earlier, there's three potential things could happen. A quarter point's expected and, I don't know how priced it in is, but that's expected at the moment. A half a point would probably scare people a little bit, but it's not outside of possibility. and that could sell us off, but you never know. And if there was no increase at all, if we go to a 0-0 and they hold the line, to help the banking sector, that could also scare people, or it could set off a massive rally. You never know, but those are the three possibilities. They do nothing, they do a quarter, they do a half. And there's a real long shot there could be a cut, but it's a really significant long shot. 100 to 1, Anyway, so that's kind of the story. And then you'll see price discovery until the press conference. And then everyone's going to be really dialed in on, what are the answers to the questions about what it's going to look like going forward? Because, everyone's concerned about that. And how is the Fed handling the dual mandate problem right now? Control inflation, you need to raise rates, but you have a banking sector at risk. You need to add liquidity, lower rates. So it's a tricky problem. There's, economics never has good solutions to problems. That there's always plenty of theory, and it never works out quite the way the theory suggests it's supposed to. Says a guy with an economics degree. It's economics needs to remember it's an art, it's not a science, and there's always more ramifications than you can model, no matter how good your model is. That's just the way it is. We get these really perverse reactions sometimes. Something that should be good news becomes bad news because of the way the market reacts to it, and that's really possible as well. So what do I like to do on these days, when I'm trading this stuff? Well, I'm looking for extremes. That's what the first chunk of stuff is. So, here's the TPO view for the last couple of weeks. And actually, this is 90 days if we go back far enough. And, we have a poor week high right at the top, which is also the initial balance of today. That's interesting. There's some old ones above us and some old single print areas above us. Same story below us, though. Poor week low. We're kind of trying to break out of this low range we were in, but that just put us right back in the range we were in before that. So, the ranges are king. Look for the extremes. We often get these really stretched out extremes on news days, where the range could get, 3 or 4 times the size it is. So it could take out some of these artifacts. That could easily happen. And, that gets interesting once those happen, to either join that crazy momentum or fade it once it dies out. I like to fade crazy momentum, but on Fed day, that can be a little dangerous because sometimes it can just keep going, short squeeze style, for example. There's also another pattern you should, remember that, whatever happens today often reverses tomorrow in Fed reactions. And there's also the 3-day kind of understanding of this. Today we're going to get the number, and so we'll have the reaction to the number today. Tomorrow will be the reaction to the reaction, and this is a very consistent pattern, and it often reverses, like I said. And then the other thing that happens is we get a reaction to the reaction, and and that's when it's truly getting priced in, and that's what we'll see on Friday. Friday and Monday is when we'll truly understand the ramifications of whatever this number is. But understand that, today is not going to get it all done. It typically takes 3 days in that, the reaction to the reaction, and then, some semblance of new value. So, don't get ahead of yourself. If you're trading this, don't overthink it. Momentum remains king in this volatility. And with the order book this thin, momentum will run right over the order book, even at places it shouldn't, quote unquote, support, resistance. Those are nonsense, and they don't mean anything in this environment. So watch for, active supply and demand in the form of, the traded volume. Is it getting absorbed or not? Are there price rejectors or not, et cetera? Okay, I'm going to be right back here. Yeah, I have returned. Ooh, we have a little push up, which I would normally be fading, but not in front of the announcement. Not on your life. We could be up 200-300 points in an instant. And NQ remains stronger than everything else. And that's just tech. Again, today it's NVIDIA, Microsoft, and Apple, a little bit of Google. It was Microsoft and Google last week. That's representative money that rotated out of the financial sector, and it just has no it just has no place to go. So remember, most mutual funds are long only, so they have to buy something. There's a lot of money on the sidelines after all the volatility we've had. So the potential for short squeezes to the upside is significant, but it's a bear market, bad news, and we could go down really hard too. So, just don't try to predict the future. Make sure you don't have any orders sitting at the edge like I usually do. And let's see if we can get some good extremes, The first good extremes would just be extremes of the standard deviations of the VWAP. We're right on the VWAP right now for both RTH and Globex. This is Globex on the left. RTH is the blue line right there. And so, a couple of standard deviations away gets us to 40.50 and, even a little higher. So going the other way, 40.14. So, those are some extremes to watch, but I think those could easily go if we get moving. I'm looking at the weekly ones on my other computer, and they're pretty far up, or on my other screen rather. Here's what the weeklies look like. The third standard deviation weekly is almost a 4,100. So, again, that's some places that are kind of easy to watch extremes for the moment, and because they're adaptive to the volume, they kind of give us a sense of the energy of the market. So that's the story. That's what we'll do. Let's see, Bar, does the news that FOMC create the new trading range for... No, ranges are pretty much off the table once we have a news announcement because we go into price discovery. So new ranges have to be formed and they're very, very unstable because they're being created by the news. So I don't do range trading at all. From this point, for this morning, it was great because we were waiting for something to happen, but now it's about to happen and that's totally off the table. So no range trading whatsoever. Maybe, tomorrow, maybe Friday we'll get some good ranges, but this is about the reaction and hopefully we get an overreaction that we can fade. Or join, if it becomes a short squeeze, for example. So that's really the mentality is, either find extremes to fade if they're far enough, if they're extreme enough, or, if the momentum is significant, look for a place to join it. And it's pretty obvious which one you're getting. The extremes happen in really sharp, sudden moves, and then we go right back down to wherever we were. And if we're going to break out and keep going, we'll never pull back. Whoever tries to fade it will get run over right away. So it's pretty easy to stay out of the way of that, unless you're just, a glutton for punishment, which some of you are. I do know that. You love to fade your way into blowing your accounts up. You should always have an exit that is earlier than that. So let's see, we have 2 minutes till the announcement. The obvious, massively likely it's going to be a quarter point, and we'll see what that does, if that gives us a reaction at all. So but that's the expectation. So here we go. I try to stay really relaxed when I'm trading news because, the market's going to get really crazy, and it's real important to just keep your head and not get caught up in the craziness and just, where am I interested in playing? And if it's not really clear, sit on your hands and just enjoy the show. It's going to get fun. Here we're starting to get the volatility now because the book's thinning out. Everyone's getting their orders out of the way for the movement. So now you're going to start seeing some price discovery right now, and here it comes. Make sure these are locked so I don't accidentally trade ES or something else I don't want to trade. Boy, look how thin the book is. There's 13 contracts bid, or bid ask here, 15, really small amounts. Any big trades are going to just sweep the book. And, that's why you generally don't want to be a big trader going into a thin book right before news. And here we go. It's 11 o'clock. Is the number out yet? Or if you're in Eastern time, it's whatever it is, wherever you are. But this is when the announcement comes. It's out. And let's see. So far, the market's not really doing anything. So, all right, there's a little bit of a bid under us. There's some strength. Okay, we're going up. This could be fadeable. It might not be. Let's watch. Made a new high. We busted out a bit. We got to SD2 here and SD3 here. I wouldn't short this so fast, though. It's a pretty good move up, but it's really just still working the top end of the range of the session so far. Here, let me put a footprint up. We can watch that. So we're up here, we just took out the initial balance high and we ran some stops up there. So this could be a short right here. This is the first place I would look to fade this right now, like in the low 90s in NQ. Just for fun, let's put an order up there. I don't think we're going to get filled, but where did I put that? 90. Okay. I might be a little late. I probably should have done that while I was explaining the SDs over here. Might get another push up. Let's see. Wow, real good volatility, but I definitely like fading this a little higher up. We got a good extreme and we got sold up there, but we could go up again. So let's keep an eye on it. And anyway, now we're going to have this price discovery going on until the press conference at the bottom of the hour. And it's fun to trade this stuff. And then once the press conference starts, it's going to get volatile again. And like I said, I don't want to fade it here, but if we can get back up near this high, I'm definitely interested in fading NQ. Actually, this 82 area doesn't look bad. There's a lot of volume right there. I just was slow in getting my order here. Let's see if this 90 fills. Looks like it might. Looks like we might get another push up, but expected quarter point. That's what happened. Here's the other stuff coming in, the other results. You can look at that. I never care what the results are. I just look at the reaction. I'm not smart enough to figure what the result itself should calculate out to. I think economists are dreaming when they think, that means this is going to happen. Nah. Anyway, it would have been a really good short up there, clearly, but I don't think we're going to revisit that extreme. And now we're right back on the VWAP, or just above it anyway. Maybe we can get one more push up. So the close today should be really interesting to see if this energy can hold, because it's mostly an NQ again. ES has gotten to break even, and it was a little bit above that up here. But, this is pretty much still building a big range. It's not like overwhelmingly suddenly bullish. And, the internals picked up right on the number, and now they're just kind of slightly improving, which is kind of what we're seeing in the price as well. So unless we get a short squeeze going, it's a fadeable push up. But the question's where and how aggressively still.
Pretty sedate reaction, really.
Yeah, that first push, I was waiting to see another aggressive push up.
Yeah.
And so I didn't really fade it. Ooh, wait a second. It's coming up here again. I'm gonna get a little more aggressive in the 80s now here with NQ. So I've got an order at 82 and 90 just for fun. Let's see if we can get back up there. A little more exuberance just might do it, and could get a big swarm setup going up there. But yeah, it is a relatively sedate response. The market improved slightly. Ooh, can I get a fill up here? Come on. Let's try to get it. Got it. Okay, I got one at 79.75. Let me see if I can scale into this a little bit on the way up here. Maybe get, otherwise, I'll just protect it on the way down and take profits. Then, whoops, don't want it there. Get that further down. So I'm going to take one more at the market, see if this one didn't fill. Okay, now I got two. And we'll take one off after about 10 points. We'll protect it now at 80. Now I got a nice runner down. There we go. So there's a nice little short. That was a quick 20 points. And now I'm short again on that other order I had sitting there. I'm going to try to scale into it unless it really gets short squeezy up here, in which case I'll get out of the way. But I think this is scalpable short up here. There we go. Okay, let's see if we can get another runner going here. We'll put a take profit stop in there, which is going to get hit, obviously, because it's so volatile. But so far, this is actually working really nicely. I'm copying to a couple of accounts, so this is going to add up pretty good. Boom, we got filled on that one. Let's see if we can get another one up here. And again, I'd do this up to about 20. If it gets much above 20 NQ, we might have a little short squeeze going. Okay, we're almost there right now. So remember, we still have the press conference coming. So this is really fast action. Some people can't do this. I'm pretty good at it. So there we go. Come on. Okay, one of them got, okay, there we go. I don't know. That might be imbalance. Let's see what we have. No, we have the right position in both accounts that we're copying to and the master. So again, I'm just scalping the action here, extreme of the range, but it could go a lot higher. So I wouldn't get too aggressive here. We're way extreme again, though. This is the spot I liked before. We actually went a bit above it. So we're at SD4 here. So it's just really good odds. That doesn't mean it won't keep going and set off a massive short squeeze. Could be what's happening right now. Let's see. There's a push. Okay. Gonna take one more there and one more right there. Prepared to scale this pretty aggressively, guys. So just have some fun with me here. But at some point, extreme becomes a short squeeze, and we're right around 50 would be about the spot I'd expect that in NQ. Seeing a little bit of absorption in ES. A little bit over here in NQ now too. So, but I could end up offsides, just for the record. Pretty far above me, but that's the nature of trading this kind of volatility. You have to get used to that. You're going to get off sides, but if you're watching the action, it's tradable. Here we go. Now it's about to come back into profit, and let's take some of it off right here as it does that. So scale out just a bit. Okay, there we go. There we go. I tried to get half of it off. Didn't quite do that. Here we go. Okay, there we go. Now I'm going to protect these last two. And now I've got a nice profit to protect. I'm going to put those together and just keep it right below 20. So as long as 20 doesn't get run over again, now this volume here, let's protect it to that spot. Keep watching the traded volume. That's where you want to protect to. I show people this all the time. Right around 10, see that's getting absorbed there. So we want to be careful. There it is. Okay, so that was nice. I just got a nice little 30-pointer out of that with that 2 lot. At the end of it anyway, scaling in and out. So that's an example of how I swarm extremes. We call that swarming here in TRG. And the idea isn't adding to losers. It's saying, boy, if we get up in these extremes, I'm really going to scale into it because the odds it's just going to keep going are pretty uncommon. It might do it. It does sometimes, but you can usually scale those as long as you're mindful of the total amount of risk you're taking on and whether that's proportionate or not. And in this case, it was very much so. It was a nice little trade there. So anyway, that's some examples of that. If we get some more, I'll take them. But right now, it's kind of, back into the range now, and it's still at a bit of an extreme, and there's still a bit under it. So I don't want to continue to play short at the moment. I want, if I'm going to short it again, it's going to have to get way back up here, maybe in the 70s. And at the moment, the high is, 40s. So I'm not going to look to fade that area again, but, an extreme push of that even farther. So that's the idea. And I like doing this in NQ or MNQ versus ES just because you get so much more volatile movement. It's easier to execute multiple contracts like that. Whoa, see, enough. I'd hung on to that. I could have got more out of it. And I never say that because that doesn't make sense when you're scalping. Yeah, that's always going to happen. Always take profits. Good trades work right away. Don't lose money and you'll be fine. Okay, let's see. Lately, I've been marking unresolved Globex price rejectors. Okay, that's not a bad idea. Not traded. All right. Well, that's a little conversation you guys can have. I don't trade price rejectors a whole lot, but I pay attention if there's one there, And right now we don't, we kind of do at the top of that, but not really. But more importantly, from my point of view, is we left zeros on the way, because it was so aggressive. So fading that made sense, but you had to kind of figure out the best place to fade it. And you never get that right with one contract, particularly in MNQ or NQ. And that's why I do the swarming technique. And TRG members, if you haven't seen the thinking behind that and the statistics and whatnot, they're in the risk management 1, 2, and 3 recordings that are in the library. I explained the thinking and the math there. But I like to do that over and over again. That's my favorite thing to do. It's number one, it's fun. Number two, it's really profitable. And number three, it's just a real easy way to manage risk without having an absolute, if it goes against me, I got to get out of the way because the market's just too volatile to think that way. You never get one price right. But, if you have the opportunity to scale around, 10, 20 entries, that gives you a much better odds way of playing the extremes of the range. So that's what I do. You just made your week on Sim. Cool. All right. Good job. Anyway, so now basically, it's going to calm down a little bit until we get to the bottom of the hour. And then we should get another burst of volatility depending on, how the questions are answered and, if Powell clears his throat before he answers or after, and does he look to the left or the right because that indicates he might be lying, all the nonsense that you hear people talking about. That'll create another round of volatility, and that's often tradable too. Right now, I would go back to sitting on my hands because we're kind of in the middle, and it's kind of bouncy two-way action with a lot of volume, and that's just not as scalpable as a real good extreme like the one, the two we just had, the one I traded. So anyway, that's the story. We'll do that at the bottom of the hour, but right now I'm just going to kind of let this settle down and keep my profits and see if we can get some more. So that's the story. Questions, comments, put them in the chat. I will endeavor to answer them as soon as I see them. This is just a dangerous spot to play because, it's going down and it's got a little decent trend, but it's bouncing a lot. And, if I was still short, I'd protect it and try to ride this down, but I wouldn't be too crazy like trying to get short here or anything like that. There could be some real crazy movement again as soon as the press conference starts and we start hearing whatever Powell has to say and, again, which way he looks and all the different nonsense people look at. So between now and then, we'll just kind of watch the show. I'm sitting on my hands. No trades here. Notice how it sometimes overshoots extremes, but it gives you a real clear idea of, where you might want to play if you watch those extreme levels of, in this case, the left-hand one is extremes of the standard deviations of the volume, the VWAP, which is the blue line. And this one over here is the same idea, but we're looking at linear regression channels, which are just a way of statistically evaluating the very, very short-term range in terms of price. And this is doing it in terms of the VWAP. So, and then this one here is just the same thing. This is anchored to the session and the other one is anchored to the Globex. So that's why I popped this one up. It's just a little easier to read the larger movement. And then, as I said, I've got ones over on the right-hand monitor that you guys can't see, but I can, that are weekly anchors. And these get interesting to look at just as, what's the extreme of the extreme? And, that's a lot farther away. But it gives you a sense of, for at least the 3 days of this week so far, what would be considered statistically extreme. And it's a long way up and it's a long way down from here. So, and that, makes sense given all the volatility we've had. Oh, that's a good push down. Yeah, my instincts of sorting that were right, and they continue to be. It's just, wow, that was a big sweep down there. Just, you could be scalping this. It's still a short, but as I said, the easy trade was the one at the other end of the range. This is going to be hard to play here because it's going to bounce a lot more because we're at the bottom of the range instead of the top. So we're also right. We just entered the value area in ES, and we're right at the top of it in NQ, MNQ. So, again, that you might see some responsive buying or short covering as it comes back into the value area. And we are, in fact, seeing that, whichever it is. Structurally, I don't think there's really much to see because the market's in price discovery, but that's what the 30-minute structural picture looks like. This is Globex over here. This is RTH over here. So you can see that big push up we have. It just traded right back into the overnight range, came right back into the initial balance range as well, which is typical. That's why, on these economic news days, being prepared to patiently wait to fade it is often a really good trade, like you saw me do. But you just have to be patient and you have to scale really aggressively when that's appropriate. And when it's not, you have to get out of the way and let it, become a trend trade if that's what it wants to do. Today, it does not feel like that's going to happen. This is a pretty respectable, quiet response. Like JVC said, it's pretty subdued. So I would think this range is going to hold unless, Powell says something profound at the press conference and that gets us moving again. So anyway, what we'll do in this session, I like to go through at least the start of the press conference. If it gets really exciting, then, we'll stick around and do some more trades. I might fade this again up here. It's not quite high enough to want to do that. Whoops. But yeah, maybe 50. Let's see if we can just catch one right there. And it ran through it, but let's see. Yeah, it's getting a little optimistic here. I could end up being off size. That was a little too early to get aggressive there. So let's see if we can take profits quick. It is getting absorbed. So, oh, wow. It traded right to my second limit and didn't fill. The first one did fill. So again, I want to get out of this, take my profits and get out of the way. It's still too crazy. So that's what I'll do. Another small profit there, but that'll allow me to probe the action a little bit. And one of the things I like to do when I'm scalping is see how hard it is to fill a limit. And when it does that, when it trades your price and doesn't fill, that's hard to fill. That's so you got to be careful, because that means there's a lot of people trying to cover right where I just was, and that's how you can get run over. So you got to pay attention to that. Our trades that you have limit orders full when it's getting to them, are they executing, or is it trading back away from it? That means you're in exactly the right spot, but how you deal with that is important. "14 more minutes till the press conference." So right now what's going on is, Powell and all the other Fed board members they're like in the men's room and the ladies' room, like smoking joints and taking shots. Then they're going to go out for the press conference. So that's just so you know what's really going on behind the scenes. 50 is always an interesting spot to play, but I like this a whole lot better way further up. So that's why that was just a little probe short, and I made a little money on it, but it also tells me that I'd be very careful. This you really want to fade this, you got to do it up here somewhere, or else you're going to be potentially in trouble. That's what I just learned with that little probe, and it is in the middle. So it's just a level that likes to get bounced off of, which is 50, but this is volatile. If it was just regular range trading, that's how you do it. You just watch the levels repeat over and over again. But we're still in price discovery, this market. I mean, look how giant these LRC ranges are. They're huge. The top of this is at 1,350. We're trading right now at 12,950 or 13,000 rather. And if you go, and the other end of the range is all the way down at 14, 35, 40 points down. So it's a massive range, and you have to respect that. And if you don't understand that, in the scalping workshop in 20 and 21, which is in the library, there's a couple of videos on dynamic range, and that's what I'm talking about right now, is dynamic ranges, comparing the short-term ranges with, for example, the session range, which is pretty big today, but it's not huge. NQs is 238. And the short-term range is most of that. That's the problem. It's in price discovery, and that's what price discovery looks like. If you have any questions, put them in the chat. I will answer them. Oh, I think my pickles just arrived. I hear the truck. That's cool. I get these fermented pickles from a place in Florida. Olive My Pickle, it's called, and they're really good. They're like probiotic fermented pickles, and they ship them cold. So when they get here, you got to pop the box open and get them right in the fridge. And I think I hear my truck. So I live at the end of a road that nobody comes up unless they have a reason to. So when there's traffic, it's usually a delivery. Percolating our way up NQ. I'd be very careful shorting this behavior. This is a little bit bullish. We could see a little bit of a short squeeze going into the close today. That would be fun. And again, remember the reaction, which is what you're seeing today. Tomorrow will be the reaction to the reaction. And then Friday, you can kind of consider it approaching roughly what the market perceives as value, correct value, given whatever happened today. That's the 3-day pattern around the FOMC announcements. Boy, it's getting real choppy now that the press conference is coming up. You can see it's doing that because it's getting thin again. See how thin the book is? And that's because, again, nobody wants to have their big orders up when Powell suddenly says, yeah, we only did a quarter this time, but next time we're going to do 3 quarters to make up for it. That's the kind of thing you just don't want to get in front of. So anywho, And we're not going to go real long. Let's see how the press conference starts and if it creates any more fun extremes. And if it does, we'll trade them. Otherwise, we'll wrap up shortly after that. So, all right, back to our class. Just think of all the ways we serve you here in TRG. How about that? Okay, we still have 6 minutes till the press conference. And how high did we get while I was getting my pickles? Oh, wow, we got back up to the low 90s. Look at that absorption right there. See, that's what you're looking for. That was a perfect spot to fade because it came up in here, the volume picked up, and every buy got absorbed until it totally ran out of gas. And then, so that's why I was off getting my box. And now look where we are now. You know, that if you just watch the traded volume for signs of exhaustion and absorption like that, you can find really good extremes. That one was still in the middle of the range, but it set up a really nice short for 30 points. So that's a really good example. Just look for that kind of behavior right there. And conversely, at the other end, you should see the same thing, only on the other side. And you do. It traded into the bid and it ran out of ask. In other words, everybody selling here got bought right to the top of the value area by a tick. Look at that. And then traded right back up here. So you could have got 30 points going that way. That's how you trade the range. Let me ask a quick question from those of you that are in the class here. I've had a couple of you ask for that, but just a quick poll. How many of you would be interested in either a specific class in TRG so that's question number one, a specific class in TRG about scalping ranges, just any time of the day or night, just range scalping. Or my thought is to incorporate that into another scalpathon. I know I did one last year. It was pretty successful. We had fun with it. Just over the course of a week, we did scalping at all different times of the day and during the night, so people could see examples of that. And that would be a premium course. So even if you're a member, there would be a little fee for that. But those are the two things I'm thinking about doing, either just a TRG range class, which will probably happen either way, and or Scalpathon 2023. Who would be interested? Yes. Okay. Scalpathon sounds good. Yeah. Last year, that was a lot of fun. It was a week. My objective was to see if I could get a 25K eval, $1,500 profit funded in a week, just scalping one or two micros. And we did. We got it funded. And we actually had a huge, really high win rate, probably a little too high, but we traded all different times of the night. We traded earnings announcements. It was a lot of fun. It was a lot of work too. That's why I'm asking. If there's not enough interest, I don't, want to get up in the middle of the night 3 or 4 times to do it, which is what it takes for me. But okay, yeah, Scalpathon. I see a lot of things around Scalpathon, and Scalpathon incorporates range scalping, which is why it's kind of a good solution. Oh, look, we're getting up here again. Watch for that same behavior in the traded volume. That's what you're looking for. We're seeing some of it right here. Absorption, see it? Remember, this is NQ. I'm trading MNQ, so this is a really good indicator that there's absorption there because that's 10 times as much money in those. And all I'm doing is filtering for 5 or more to see where the blocks are. And over here, I'm just letting them all go 1 or more so I can just see the momentum of the tape. That's why I'm running 2 NQ tapes while I'm trading MNQ. For those of you that are guests or new, don't know that one. Purchasing the kimchi, absolutely. I'm also going to be babysitting for Kimchi the cat, Kimmy the Chi, the trader cat. Her mom's going on another trip to Europe. So later on in the summer, I'm going to do some of my classes from here, and then I'm going to set up another office at her house like I did last year when I went to Tacoma and trade on that big TV, and I'm going to bring a couple of my monitors over there too. So that's another event we will be doing. Trading with Trader Cat, Kimmy the Chi. Many of you know Trader Cat. She's very, very famous on Instagram and elsewhere. Boy, look at this percolating here. It's getting absorbed, but be very careful trading this volume because we are just about to start the press conference and it's getting skittish again. So look at that big block right there at 50. Let's see if that trades. 200, boop, they did. Look at that right there. 318 traded right at 50. And, so you can't read much into that other than that it's probably some other time frame trader or somebody taking a position off in front of the press conference. Maybe they're hedging something. I wouldn't be doing ES. Right now, I really like scalping NQ, but if I was, the trouble with ES is you really need like 3 or 4 different filters. Watching ES one contract trade at a time with the amount of volume that ES does is insane. It's useless. But if you're just watching like 5 or more, it's going to go too fast. So, with ES, I kind of watch two things. I watch, the 1, 2, 3, 4, 5 lot action, and then I watch small blocks, 10s, 20s or more. I used to watch, for like when there's hundreds going off, but most of the big traders don't run big blocks like that anymore. They do them in chunks. So, I'd be looking for, if I was doing the same thing here, which doesn't work as well in ES, but if I was doing that, I'd probably be filtering two or more on the right side tape and 10 or more on the left side tape to answer your question. But again, it won't give you the same level of precision because there's so many algorithms and hedging going on in ES. That's why I now exclusively am trading MNQ and NQ, nothing else. I'm not trading any of the other index instruments. It's just the pickings are too good in NQ. It lends itself to specialization, and the amount of movement, while it freaks some people out, is just infinite opportunity. You never have to struggle to find a good trade in NQ or MNQ, but you can have a good trade idea in ES and really struggle to execute it because, something like that'll happen where it sweeps down from 48 to 44 and back. How do you manage risk in that when the tick value is as high as it is in ES? I just don't see a way to do it. So I look at that and I say, okay, that's the action I'm going to trade off, but I'm going to execute it over here in MNQ or NQ. Okay, so that's a long answer to your question, Barb, but it's the right one. It's the right answer. Oh, we could even do real quick while we're waiting here for the press. Actually, it's starting right now, so we should start seeing some good volatility. But see, look how back and forth it is in ES. Like you always get this 3 ticks up, 3 ticks back, 3 ticks up. That's very then 10 ticks and then back 3, and then then up 10, back 10. ES, as much as I love it and it's the show, it's become harder and harder to really trade accurately. And MES isn't a lot better, but NQ just is so much more elastic. The extremes stretch so nicely and snap back so nicely, and so I think that's why it's just easier to routinely pull money out of NQ and MNQ. I was, up until last year, I was trading both very aggressively, ES and MES and NQ and ES. And after I went through all the optimization with my buddy that I told you about with swarming, I've abandoned ES and MES. It just, on the times I can trade it, like what I used to say to you guys was, on the days when ES is trading like NQ, I'll trade it like NQ. But what my buddy's optimization model told me about that decision was, you're still better off in NQ than trying to do NQ behavior in ES. You will get more movement. You're more likely to be profitable. It's easier to protect the profits because it moves so much more. You can get a stop between you and your entry. And so for all of those reasons, it was a really logical decision that I battled for most of 2022, and I finally accepted it this year that I'm just going to trade NQ. I'm going to be like video game guy and just hyper specialize, and I'm going to use all the information for the other indexes to get better and better at NQ and MNQ. So that's the detailed answer. God, crazy volatility. Look at this. You certainly could have faded that spot again up there. Look, while I was talking, look what happened, We made it up to 20 and then it got sold. 20 is always a good spot too. There's really routine spots that NQ likes to visit, 50, 72, 92. It always blows through 00, never pauses there except when it's coming back or backing and filling one way or the other. And then it always blows. If it blows 00, it almost always will make 20, and that's a really good range to fade 00 to 20, or 00 down to 92 back up into the range. Those we just see those over and over again in NQ. And so that much movement just gives you so much opportunity to extract profit, whereas ES can be a bear to do that in. The other thing I've found with ES and MES versus NQ is that it's much harder to work my way out of a bad trade in ES or MES. Once I'm trapped, I tend to stay trapped. Whereas NQ, even if I'm off sides, I can work my way out of it. I showed an example of that earlier today. So, for all of those reasons, it's become my go-to instrument. But I get that it seems really crazy to most people how much it moves, and it's hard to wrap your brain around that. I do understand that. what I found is it's just a matter of practice. I learned that from Video Game Guy. I've said this a few times the last few weeks. The student becomes the teacher. Just watching him implement what I taught him made me better at what I do. He's doing what I do better than what I do. And so I'm learning how to do what I do better by watching his implementation of what I do. He's better at it. Part of it is his personality, and his ability to focus is better than mine. He's younger and he has Asperger's and I don't. But a lot of it is just, his ability. And I think this comes from video gaming. He's just constantly looking for ways to improve. And, he's just hyper focused on the traded volume. And I think that's really powerful. So anyway, well, we're getting a lot of crazy volatility now. So this could set up another good trade. Now it's going down. So whatever Powell said, the market doesn't like it. I wouldn't necessarily be looking for a long down here, but if it gets extreme enough, I might. We're just basically right back at the VWAP. Again, reinforcing the idea of being short at the other extreme was the right answer, but that doesn't mean to being long here is the right answer. It just means that the short trade is working, but it's probably running out of gas down here. So I wouldn't necessarily look to buy this. And I certainly would protect profits I had in the short, and I wouldn't initiate a new short here. That's the binaries, as I like to call them. What trades am I willing to do here or nearby? Is there a long? Yeah, but it's a long way down for me before I get interested in a long. Would I short into this momentum? No, because whatever he said, he could say the opposite 2 seconds later and we go the other way. Not going to do that either. Would I short this further up? Yeah, we get back to the other end of the range. That could get interesting, but we're nowhere near there now. So that's that. We're about to break the lows aggressively. Look at these three over here on the right. Look at those momentum tails. Bright red, but here come the buyers trying to hold up the bottom. So, what great action. Really great action. Let's have a look at the footprint just real fast to see if there's anything. Look at all the zero prints. So there's a lot of aggression through that at the bottom of that high volume node. And then the bottom isn't really clean. It's not a price rejector, but it didn't leave UB and it traded to the previous demand. And now it's ripping back up into the range, which is what you'd expect. Great scalping environment. Structurally, it's a mess, which you'd expect because it's in price discovery. And that's kind of it. I don't really feel like just staying here and scalping the extremes too much longer because we've already been going an hour and a half and change. Or no, not quite. But anyway. I'm just getting tired. This is my third event of the day. So I think I'm going to go ahead and start wrapping it up. You can kind of see there's some great volatility here, but until you get to a place that it makes some sense to try to play, I would not play in this action here. It's just going both directions way too fast to even, pick a range out of it. And, you can see giant absorption like that, and then it'll trade right back through it the other way. So yeah, this is price discovery, not ebb and flow. Oh, are we going to get another short up here? Maybe. All right, let's wait and see if we get a short. I would like shorting up here again. Let's park an order way up there and see if it comes up to it. I put an order at 80 just for fun. It's trading 40 right now in NQ. So maybe he'll say something they like and we'll rip up and I'll get a fill. Let's see. That doesn't get to much of an extreme, though. The first extreme is at 02, so even getting a fill at 80 isn't that ideal. But here it comes. Let's see if we can catch it. Here it comes. It's coming to me. That was 30 points away. Let's see if that fills. It didn't quite get there. It got to 70, though. See, and then it got sold. See that right there? It got to 70. The buyers absorbed it. It got sold, and we pushed back down to that volume node that we were on before. That's what it will do, even when it's a big, giant range like this. So, again, stay way at the extremes, and sometimes you can catch good entries. But, I've got that one there. Maybe park one more up here. That would give me a decent little two lot if it swept suddenly up. So let's see. See if that happens. Coming. Here it comes. Oh, got it. Okay. Protect it right away. Oh, look at this. I'm short at 80. We're trading at 70. 10-pointer. Now it's a 15-pointer. Now it's a 20-pointer. You see what I mean? Look at this. We're at 60. I'm short from 80. Now it's at 50. That's how you do that, guys. That's how you scalp this stuff. Okay, how's that? So now there's 60. So I have a 25-point winner. I'm locking in 25 points right here. See if we can get more. Now 50 is traded. That's 30 points. Now it's in the 40s. That's going to be 40 points. If it doesn't bounce, boom, we got it. 40-pointer. That's how you do it. Let it come up to you, fill you, and immediately go in your favor like that. That's what I mean when I say good trades work right away. That's what they do. And they do that, if you're battling it, then it didn't work right away. That doesn't mean it's wrong. It just means you have to think more. That was fun. Okay. Yes, you're welcome, Todd. I enjoyed that one. And I'm going to go ahead and wrap up here unless anybody has any questions. I showed that enough times that I think we accomplished our objective for the day, for the class, and that was a lot of fun, and we made some money. So those are all the good things. What else? Oh, wow, here we go. Wait a minute. We may have another short up here. That was a ripper to 90. I canceled my order there. Oh, well. Yeah, he must be saying something that's controversial. Anyway, you get the idea. Oh, gosh, another one up here. All right, let's see if we can catch a rip. Maybe to 10 and 20 now. So 80's trading again. So now I want to catch the next extreme up, which is 10 to 20. So I've got an order at 10 and an order at 22. Yeah, I'll move them if I need to. I'm just poking them up there to get them in line. I doubt we're going to get that back up to that edge of the range, but it's possible. So we'll give it a minute and we'll start wrapping up. Are there any other? Awesome. Answering questions. Okay. Yes. Yeah. I wasn't sure if that was a question, but if anybody has any other questions, this might come up and get me. So I'm going to wait and see. Meanwhile, I'll entertain them. Otherwise, we'll start to wrap up here. Again, you don't want to play this middle. You want it to push up and get another extreme. You could argue it might not make it to 10, maybe this high volume, and it trades, maybe to 7. So, you could stick that there. That's a little more aggressive. Here it comes. And I just don't think we're going to get that far. But if we do, I'll fade it. You can see absorption right here in ES at 50 again. It's only done that 5 times. So, all right, here it comes. Come on. Let's get an overshoot. Come get me. Come on. There's 0. It took out 0. Big chunk of volume there. See, and now it's all right. Here we should get a fill on this one. We did. Okay, and I'll just take a quick target off of that. And, I'm not going to try to get too much of a runner here. See if that 21 fills. I'm going to take, oh, good. We got it. Okay, cool. This could be a really good giant swarm here. Or the market really likes whatever he's saying and I could get run over, but that's not likely. Let's see. Okay, so now I got 4. I took 2 off really quickly right there. I'm going to take 1 more off, protect the last ones. Okay, now we have the same trade again. So again, I'm now short from whatever up here, 20. It's trading 10. There's another 10-pointer. We're flat again. Okay, I'm going to exit on that example. If there are any other questions, I'll take them. Otherwise, I'm going to go take a nap. How's that? Anything you want to add, JVC?
Nope, nothing for me. That was a great note to end on.
Yeah, it was fun. And we picked up a couple $100 there just doing that. So I'll take it. All right, we'll see you guys. Let's see. That's the last thing today. Tomorrow, we've got some Lee events.
Fishing trip and dynamic position sizing and risk management. So that'll be fun. That's a good topic. He's got good thoughts about that for all of you. So, all right, I'll see you later.